PayPal is our new market analysis. The shift from cash to digital forms of payment is a powerful global megatrend. As a leader in digital money transfers and payment processing, PayPal Holdings is uniquely positioned to capitalize on this trend and deliver fortunes to its shareholders along the way. Consumers love PayPal's digital payments network because it makes online purchases easier, faster, and safer. These features also help merchants appreciate it, who tend to see their sales conversion rates improve when they offer PayPal as a payment option on their websites. Thanks in part to these benefits, PayPal's active user and merchant accounts increased by more than 392 million and 28 million, respectively. PayPal's revenue is mainly driven by the total volume of payments, TPVs, flowing through its platform. The win-win scenario that PayPal has created for both consumers and businesses and the resulting network effects should continue to increase TPV thanks to the arrival of new users and merchants. In addition, as a neutral payment processor, PayPal is not tied to any single e-commerce operation. Users can enter their payment information into PayPal's secure system once and instantly access a world of buying opportunities. In addition, PayPal has wisely chosen to partner with payment service providers around the world, including Mercado Libre in South America and Alibaba in China. Rather than trying to compete with these international heavyweights, PayPal works with them to provide new services, such as cross-border payments. In this way, everyone benefits. For all these reasons, PayPal's revenue and profits are set to rise steadily as more transactions flow through its platform over the next few years. What makes PayPal a good investment? At its recent Investor Day presentation, management set a goal of increasing PayPal's account base to 750 million by 2025. As the company strives to reach its long-term goal of 1 billion users making transactions per day. With fewer than 400 million users today, PayPal remains at the beginning of its growth cycle. Venmo will be a key factor for growth. PayPal's popular peer-to-peer payments app is expanding rapidly. Venmo processed approximately $51 billion in TPV in the first quarter, an increase of 63% year-over-year. Yet PayPal has just started monetizing Venmo. New services, such as cryptocurrency trading, should help fuel Venmo's revenue and profit growth. As PayPal expands its business, its profit margins are expected to expand over time. Year to date, PayPal has experienced impressive average growth of 25%, while its operating income has risen by 84%. Simply put, PayPal is already a money-generating machine. In addition, PayPal has an available liquidity of more than $4.79 billion. This gives PayPal a lot of money to invest in new products and initiatives, as well as acquisitions that create value. All in all, PayPal predicts a future where it serves as an all-in-one, super application for its customers. It aims to complement its existing payment processing and money transfer services with a number of new financial solutions, high-yield savings accounts, investment tools in stocks and cryptocurrencies, budgeting and bill payment services, along with an ever-expanding range of new applications. Each of these services could help strengthen the others, thus making the PayPal platform more valuable and more adherent. The data collected by these services could also help inform PayPal's product development and improvement efforts. Financial return. In 2020, revenue increased by 20.72% compared to the previous year to $21.45 billion. Net income increased by 70.88% to $4.2 billion. Risks and how PayPal could be left behind. Competition is fierce in the payments sector. Although PayPal's scale provides advantages over its smaller rivals, it must remain at the forefront of innovation and be willing to adapt to changing consumer preferences if it is to maintain its leadership position. The premium valuation of PayPal also poses a risk to investors. Its shares are currently trading about 50 times its projected earnings in 2021 and 43 times its EPS estimates for 2022. Any material slowdown in total payout volume or other key growth metrics in PayPal could force investors to readjust their expectations and lead to a contraction in the stock. Yet, we are not overly concerned about this. We consider PayPal an elite company with huge long-term growth prospects and are willing to pay a reasonable premium for quality. According to the news of the main newspapers, in particular Bloomberg News, PayPal wants Pinterest and has put on the plate an offer of about $39 billion for the acquisition of Pinterest. However, several shareholders of PayPal have not been enthusiastic about the possible acquisition, and this has led the stock to a reversal of about 10%. Pinterest shares, on the other hand, rose nearly 13% yesterday after the news broke. Today, however, they have decreased by 2% for fear that the agreement may be in danger. In any case, we believe that this reversal is not in the least related to the performance of the company or to a possible regression. PayPal is, and will remain for a long time, one of the best companies in the world in the fintech space, with or without Pinterest. The stock is currently at -20.27% from its all-time highs. The reversal had yesterday and today has brought the stock to an entry price. Not discounted, but reasonable, if the intent will be to keep it for the medium-long term. Ultimately, PayPal is a leader in an increasingly important industry, with partnerships, cash flow and innovative culture to keep it at the top for many years to come. Investors buying stocks today should be well rewarded as PayPal realizes its fantastic growth potential and its place in our financial lives. I hope you liked the video. In that case, I invite you to subscribe and put a like to support the channel. Thanks.